Welcome back to Mr. Curran's Ledger-ary tutorials, and what we're going to be looking at today is analysing accounting information. So in other words, we're going to be analysing two financial statements, that being a statement of profit or loss and also a statement of financial position. And in particular, we're going to be concentrating on trends. So in other words, accounting trends. Last podcast, we looked at the accounting assumptions and in particular the accounting time period assumption. You'll need to know the definition for the accounting time period assumption, the importance of it, and to apply it to a given scenario in the exam. Now for the most important part of the actual vodcast, the accounting joke of the day. What does an accountant use to hang decorations? Tax. You're right, Beavis and Butthead, that was quite a funny one, wasn't it? So you can see, being an accountant is just not adding up a calculator and working out how much expenses and how much income a business actually makes. A good accountant will be able to produce those financial reports and then to analyze them in order to improve the business's profitability and the ability to grow in terms of market share and also to generate assets for the actual business. And that is what we're going to be concentrating on today. What accounting trends should an accountant look at in order to help their client? In the exam, you will have an extended response in which you'll have to write or type 400 to 500 words. Now, within that report, here's the structure that you're going to use. Now, first of all, you're going to have to identify and explain the issues within the actual two financial reports. So the two financial reports that you're going to be looking at are the statement of profit or loss and also a statement of financial position. And within those, you're going to analyze four ratios: the net profit ratio, the return on owner's equity, and the leverage ratio. We're going to leave our return on assets for a later unit. Within those subheadings, you're going to have to look at the trends within each of those ratios. So in other words, what is actually happening within each financial indicator, whether the ratio is going up or down, and what does that actually mean for the business. And if the ratio is going up or down, what does this have a flow-on effect on? So we're going to be concentrating on this bit here, identifying the trends. And from there, what is the implication of this trend for each financial indicator? So in other words, what do these figures mean for the owner? So essentially, we're going to be doing this in another vodcast, but for today, we're going to be concentrating on the trend analysis and identifying trends within those two financial statements. So, an accounting trend is basically represented by a general direction and momentum of behavior of a variable in a time series. Now put that in layman's term, it's basically meaning that account, whether that's from a statement of profit or loss in the forms of sales, wages, advertising, or cost of goods sold, is increased or decreased over time. And an accounting trend can be either one of the four things: a change in financial data, so in other words, a change in an account; a change in market share, so you could actually have information about the business and whether their market share has increased or decreased within the industry. As with the business that we learnt last term, a accounting trend could also be a change in customer preferences and demands, or it could be an increase in automation and the use of our assets internally to an efficient basis. But primarily, for this exam, we are going to be looking at the first dot point, and we're looking at changes in financial data. So in other words, changes in the most important accounts in the statement of profit or loss and the statement of financial position. Now, within a statement of profit and loss, there are some key accounts in which you will obviously analyze and look at the trends. So a trend here we can see here, you will have in the exam a variance trend. So that will be a dollar trend and also a percentage trend. The dollar trend is obviously the difference between what happened last year and what is actually the case for this year. So you can see here revenue has gone down $5,000 or a 3% change from last year, a negative 3%. So that is one trend that you will be looking at in the exam. Another key trend or another key account within the statement of profit or loss is advertising. Now, advertising has a key relationship with your service revenue. If you don't advertise correctly or your advertising gone down, you can obviously expect a negative impact on service revenue here. And we can actually see here that is the case. So last year we spent $3,000 in advertising, decreased to $1,000, which resulted in a 67% decline. You will not have to work out any of these calculations. They will be done for you. And as a result of that 67% decline, we've had a decrease of $5,000 in our service revenue. So that is two key trends that you'll need to obviously look at. Service revenue, what's happening there, and also advertising. Now those two accounts will have a key impact on the net profit ratio and also the return on owner's equity. And there will be also other accounts in there in the form of expenses that you'll need to look at. So in other words, you'll be identifying the key movements or the key variances between the two. And as you can see here, service revenue has dropped by 3%, drop in advertising at 67%, increase in supplies expense of 75% or $6,000, and an increase in wages salary of 43% or $6,000. And all of these key increases in expenses has led to our drop in profit as compared to last year, a 45% decrease in profit. So increases in expenditure will have a negative impact on net profit ratio. So that is one key relationship. And also advertising is a key relationship with service revenue. If your advertising increases, you should expect a comparative increase in service revenue. Or if you increase, or if the advertising decreases, you might find there'll be a decrease in service revenue as well. On the other side, the statement of financial position, which is looking at assets, liabilities, and owner's equity, you can see here that there are a number of key trends here. One is the increase in accounts payable. So that's gone from 4,200 to 4,800, which is a 14% increase. Now that is negative because that is not a positive thing for the business. That means we actually owe more money as compared to last year. We've also noticed here that the cash at bank has gone up from 500 to 1,000, which is a positive 100% increase. Accounts payable has gone down, and equipment has gone up as well to a 16% increase as well. So another negative impact is, as you can see down here, is your drawings. So it's gone from 30% down to 26,400, which is a 12% decrease. So you're looking at, in your statement of financial position, the following accounts which are very important. Cash at bank, accounts receivable, your accounts payable, your drawings, and any increases in assets as well. Another key account, which is not on this statement of financial position, is your loan. Okay, so they are the main accounts which you'll be looking at in the statement of financial position. Fantastic news, everybody. The YouTube channel has a new sponsor, and that is Pineapple Pen. So we are going to watch the ad for Pineapple Pen.
PPAP. I have a pen, I have an apple, apple pen. I have a pen, I have pineapple, pineapple pen, apple pen, pineapple pen, Pear, pineapple, apple, pear. Pear, pineapple, apple, pear. Dance time. I have a pen. I have a pen. Long pen. I have an apple. I have pineapple. Apple, pineapple. Long pen. Apple, pineapple. Pear, pineapple, apple, pen. Pear, pineapple, apple, pear.
Thank you to our marvelous sponsor for that fantastic interlude. Pineapple pen can be sold at all major retailers, including Big W, Target, and Kmart. Okay, what we're going to be looking at now is your chance to look at and identify major trends within a financial statement. So this one is a financial statement extract. What I want you to do is to identify which accounts you would obviously be looking at and documenting in your report. And I'll give you a couple of minutes in which to actually identify those. Okay, so from that extract there, we can see here that service revenue has positively increased by 11% from 180,000 to 200,000. So in your exam response, you should quote the percentage variance and also the dollar variance. Conversely, supplies expense has gone up by 21.4%, so from 14,000 to 17,000, or a difference of 3,000. That's not ideal because that is obviously impacting our cash flow. On the flip side, bad debts has gone up by 71.4%, so we are actually losing money as some accounts receivable are not repaying their debts. And also advertising has gone up 33.3% as well. So you will be monitoring all of those accounts because they are huge variances. So a rule of thumb, probably anything from 7% upwards, I would actually be documenting in your exam.
The boy has no skills. You're schooled by a little girl.
Yeah, right, Terry. That was some very suckful financial results there for that business owner. Okay, so we're looking here now some accounting trends in this graphic. So I want you to actually try and explain what is going on here with regards to accounts payable and also the loan. Okay, as you can see here, the loan went up by 60%, and the business should be funding expansion through the profits and not the loan. So you can see here they are not generating enough cash flow because their debts have gone up and also their loan has gone up as well. So they're either withdrawing on the loan to fund the day-to-day operations of the business or to expand their property, plant and equipment. And that is not a financial result that you would actually want from a business point of view. Okay, that's all we have time for today on Mr. Curran's Ledger-ary accounting tutorials. What we're going to be looking at next week is the accounting issues. So this will go hand in hand with the topic of next week. So remember, in summary, an accounting trend will either be a financial variance from last year's statement of profit or loss or statement of financial position. Document and record in your assessment any variances which have increased by at least or decreased by 7%. And the main ones that you're looking for in the statement of profit or loss are your service revenue, your advertising, and any expenses that have decreased quite exponentially from the previous year. From the statement of financial position, the main accounts are your cash at bank, your accounts receivable, your accounts payable, your loan, and also your drawings.